I got in roughly over a month ago when shares were about $20, $21. I got in right around then because I saw the CEO's dad, Ernie Garcia Sr., started accumulating. He started buying up more of his shares. And if there's anything I know, when the whales start buying, that's when you should be buying. So when I saw that, I immediately started buying. And I knew even if it went down a little bit further, there's no way it could go that much further down. The risk to reward was such in my favor that I knew it wasn't going to be a big deal. So I started accumulating back then. I picked up close to 1,000 shares at around $20. 20, I think my average cost per share is around $22, $23, right in that range. So I started accumulating, and in the next 6 to 8 days, I started noticing it went down and went up and went down and went up. And I started noticing bullish patterns start to arise in Carvana stock. So that's when I started buying options. I doubled down and I put even more into it. So that's how I got into with about 1,000 shares. So we're sitting at about $50. And I'm going to tell you that Carvana is one of my favorite stocks right now. And I'll tell you why, because there's a few reasons why I think Carvana is very undervalued overall as far as how high this thing can go. We already saw during the last bull run that this was already going to close to 360, 370, I think was its all-time high, which was insane. 360, yeah, 360 is the highest I see at the very peak of the bull run back in August of 2021. So when I see that, I see that it's gone down about 90%, which is about what the worst that the cryptos have done is about 90% as well. And it's trading almost like a meme coin, or almost like a crypto, meme crypto, which is crazy to me because it's a stock, and it has earnings, it has, employees, it has all these things that a lot of cryptos don't have. Yet it's trading like it's one of these meme coins, like it's one of like a Shiba token or a Dogecoin or whatever. It looks like it's trading on momentum and potential almost, which is why for me that makes it one of my favorite stocks right now, because I have a feeling that when the mass people start seeing the accumulation and the momentum of it going back upwards, people are going to start jumping back on it. We're going to see this thing start reaching all-time highs again. Maybe not anytime soon, but in the near future, in the next year or two, I could see that happening for sure, which I'm planning on holding for most that time. Like I said, I have close to 1,000 shares. I have some call options expiring next year. I am very bullish on Carvana as a whole. I don't think it's going to go too much further down. If it does have a little bit of a pullback in the next month or two, that I could see that happening, but I don't see it coming back down to those all-time lows of $20 anymore. I think we're kind of past that point with the last CPI, as well as just some bullish news coming from Carvana's CEO, Ernie Garcia. I know they had an announcement today where Ernie spoke to the entire company and he kind of gave them a plan on how they're going to become profitable in the next couple months to years. And I could see just the vision that Ernie Garcia III has, which is the CEO, the son of the senior. And if you don't know about Carvana, Carvana is a very large online used auto retailer, dealer, I guess you would call it. It started off as Drive Time back in 2012, I believe, and they have just started growing slowly more and more. And now it's run by Ernie Garcia III, who is the son of Ernie Garcia II, who started Drive Time originally. And they have this very broad approach, very similar to Amazon, where they wanted to buy up as much as they could. They tried to accumulate as much used cars as they could and just kept buying and buying and buying, so that in the long run they could become profitable as long as they had the sales and the revenue, which the revenue is doing well. They're doing close to $4 billion in revenue. They are 16% up from last year. However, the rest of their earnings call was not the greatest. They had a net income loss of 238 million. Their earnings per share was negative $2.35, with a net profit margin of 6%, which negative net profit margin is not great. But there's a lot of huge companies that run on losses, and they just are there for the growth until they become profitable, which is kind of like Amazon's approach and Tesla's approach, and all these big companies. And the reason why I'm not really scared of this company is particularly going bankrupt because yes, obviously when you're losing money, you got to worry about cash flow. You got to worry about how long they have until they run out. But the reason why I'm not particularly scared is because this company is ran by billionaires. Ernie Garcia and Ernie Garcia third are the owner son of Carvana, and they have billions of dollars. They obviously know how to time the market properly because they sold a bunch of their shares back in November, December of last year when they were at an all-time high, and are starting to accumulate now again when it's at these really lows of $20, $25, $30 per share. So they obviously know how to time the market. They obviously know what they're doing with finances, which is why I particularly am not worried about them going under. However, I would still be cautious because if a company is not performing well, you never know what's going to happen. Obviously, they could be saying one thing to the public and meaning something completely different, which is why I particularly am not too worried about what they're saying to us. I'm really just looking at the overall earnings. I'm looking at the revenue, how close to their targets they are, and they're not doing bad. This last earnings call it was a miss, but it was actually a pretty close miss. They missed by about 3% as opposed to the last earnings call, which they missed by marginally more than that, which is something that you should pay attention to with stocks and how they trade. Obviously, if you're following me for crypto news, this is a little bit different. You may not be used to a lot of these terminologies, but just know that if you do want to get into stock market, there is more things that you should look at as opposed to just crypto. Right now, crypto market being down, the whole stock market being down. I think that right now, the best and easiest way to start earning again, start making some more money in this type of market is probably stocks. I'm not selling any of my portfolio of crypto. I'm still holding everything that I've been holding from the last couple months. I still have everything that I told you I had back in February. I'm still holding my Dogs of Elon. I'm still holding my Dogalon Mars. I still have all my other cryptos. I'm just holding, guys. I'm just waiting for this next bull cycle, which, right now, Bitcoin is currently on a $24,000 coin, I believe. Let me look that up again. I think it was sitting at about 23.9 as of this recording. So we did see a little bit of a rally from last week. We were at 22, and obviously last month we were sitting at about 19.3. So we are seeing a bit of a rally. Now, I don't think this is another parabolic run movement up towards, you know, all-time highs again. I don't think we're going to see that $60,000, $70,000 Bitcoin right now. I think what we are going to see, like I said prior in the year, is we're going to see a slight pullback, which, we did already see that when we were at 45 and we dropped back down. And now we're going to see a slight rally again, probably up to that $28,000, $32,000 mark, like I had mentioned. And then I see another pullback happening. And I see that happening, up until we see a reason why this bull market should start going back up. Right now, with interest rates at an all-time high, with our inflation at an all-time high, we don't really have a reason for our bull run to start going to our all-time highs again. We don't have really low interest rates. It costs a lot of money to borrow money right now, so people aren't borrowing as much. People aren't lending as much. So I'm not seeing a huge rally coming anytime soon. What I am seeing is a slight rally due to some very narrow positive news. It's just some very small positive news, some local positive news that has been happening recently. I just see like CPI and other things affecting what we're seeing in the market right now. I don't think this is the next bull run, guys, but I do say that you can still make money in this market. You just have to look out for the right opportunities. Carvana is one that I've put myself into recently. Like I said, I've been in for about a month now, and I see myself staying in that for a while because right now, like I said, it's at a $50 stock and at all-time high of $360. We're looking at a 7 multiple, right? So whatever money you put in right now, if it gets to that all-time high again, you're 7xing your money, which is a great return on investment. 700% is nothing to laugh at. That is a huge, huge return on investment, especially if it's within a year. Most people are looking to get, 8 to 12% return on their investment within a year, and they're happy. You're talking about 700%. That's crypto gains. That's something that you don't see in the stock market for the most part. You don't usually see that type of return, but because we've seen it happen already, and because I know that Carvana is a huge company that is already a Fortune 500 company, it's the youngest Fortune 500 company ever. I could see that just being a huge catalyst as to why this just keeps pushing up past those all-time highs in the next coming year, 2 years. And that's why I'm holding on to these stocks. I think I'm gonna hold on to them until I hit, at least 3x my money, 4x my money, and then start cashing out some just to take in some profits, and then we're gonna see where we go from there. But yeah, guys, if you haven't had a chance to look at Carvana as a stock option, I highly recommend it. There are, numerous other companies that you could put your money into. Obviously, a lot of people like Tesla. I also have a lot of stock in Lucid Air. I think Lucid is a great electric car company, especially for luxury electric vehicles. I think they're going to be the leader in that segment. Tesla's build quality is just not there, guys. Lucid is one of those companies that I just see starting to take a lot of interest from previous Tesla owners because they have that premium build quality. They have those premium materials, they have the speed, they have the electric capabilities with the long battery life. There's so many great benefits to a Lucid as opposed to a Tesla, which is why, and the price point is relatively the same. It's pretty close when you compare them, the Tesla Model S Plaid next to the Lucid Air. You're tossing up pennies at that point, and I just see the Lucid as being a better value. So I could see that really taking off in the next couple of years as a stock option, and maybe even have a better return as opposed to Tesla. Tesla already has such a humongous market cap. Last year, I think they hit $1 trillion valuation. And in order to see more than that, you have to have a lot of money. So in order to see a return on your money that's larger than what you would see from, the same influx of cash into Lucid, you would need billions and billions of dollars to enter Tesla if you wanted to see a larger return, which is why I have my money in these smaller companies, maybe not necessarily smaller, but not as blue chip as Tesla or Apple or Microsoft. These humongous companies, because you're not going to see it such a huge return as you would if these other companies start to pop off like Carvana has, right? I already saw 1.5 times my money since last month. I put in 20K, it's already worth, $35,000. So all I'm saying, guys, is pay attention to the market, watch the trends, and you guys will be successful. If you have any questions, you can always leave a comment down below. Make sure you like and subscribe. You can follow me on Instagram at alex.cotti. I do have a Telegram group that is slightly inactive right now just because the crypto market is not really popping off, but you can follow me there as well. And I will respond to that, any messages in there also. And like always, guys, if you have any questions, feel free to reach out to me. All right. Peace out.